morning, everyone. Welcome to our May Newton Insider. A lot of exciting topics to talk about today. I've got participants from the Coldwell Newton office, Barbara Hakim, Arthur Cantor, Lorenzo Fitzgerald, and Ann Manipech. And we're here today to talk about the most common question asked: what effect are increased interest rates are having on the market? And what should buyers and sellers be thinking about? Let's get going. So what effect are we seeing? Barbara, what do you think is going on in the market?
Well, it's not a secret. It's on national and local and regional news that the real estate market is unlike any other, for a perfect storm of low interest rates and lack of inventory and highly motivated and a multitude of buyers. That kind of a perfect storm of not much to sell, competitive properties going up way high, and also interest rates climbing daily. So what I'm saying is basically, people ask, is this a good time to buy? With interest rates, it changes your mortgage payments monthly the higher they go. So if you're really tight on what you want to spend a month, it's worth it to take a look at the housing market and find something for yourself now and write an offer. What I do recommend to my own buyers is that they look in a price point less than what their top line is. I think this is key, because when you start looking and you're looking at the top of your price range, inevitably in this hot market, you're not going to be able to get an accepted offer, because more than likely the property will go above asking. Be realistic. That's my short answer.
Arthur, do you think there's a bubble?
So there's no bubble. There might be a lot more inventory in May than there was in April. I just ran some numbers for our primary markets, and this month versus last month, and in Newton, actually, this month versus last month, the inventory is actually doubled. Now, it might not have doubled in your price range, but overall in the city of Newton, it has. And the sale to list price ratio, it's only running at about 103 to 102%. So it's not like the 110% or 115% that we saw last year. Mm-hmm. So that's come down, which is good. So it's not as overheated as it was a year ago. Although, with one caveat, there's, again, those certain price ranges, the $700,000 to $900,000 price range is a real sweet spot in so many different towns that, yeah, sure, everybody wants to be in that price range, excuse me.
So what I saw just recently, I just read, there's a deficit of 6 million housing units in America. And that's a lot, right? Like 6 million is a lot. So the fact that there's such a deficit in supply, even with increased interest rates, we're not seeing a very large impact.
No, not yet. Plus the 7-1 ARM. If somebody wants to do that, get into a 7-1 ARM and, get a 3.75% interest rate instead of, getting the 30-year fixed rate of 5%, 5.25%, you can look at it that way too. So you have a little bit more purchasing power. Barbara's idea is great. Don't look at the top of your price range. Go a little bit lower and then come in maybe a little bit more, and you'll get your house. I've also seen that the stock, we've all seen the stock market. That's no secret. What happened there year to date? We're down 15% in the stock market. And so, that combined with the rise in interest rates, I think have scared a few people onto the sideline. But, is it a good time to buy? I think it's a great time to buy, because these prices just keep going up. There's only so much dirt. In our community, there are no subdivisions here. We can't create any more land. What is here is here, and that's all it's gonna be. So yes, there are certain towns, people are compromising commute for buying real estate now. Yeah, they're willing to go out further and take that 45-minute to an hour commute to get more house for less money at the moment, which is fine.
What do you guys think about sellers? What about sellers? Is this a good time to sell?
It's, if you think of basic economics, demand, supply. If you want top dollar, you have to jump into the market regardless of whether it's a bicycle, a house, or makeup, whatever. And if there's nothing on the market, then the sellers have leverage to get top dollar. So if you're a seller and you know this density of like buyers is out there and they're not finding what they want, how can you lose?
100%.
Yes, it's a great time to sell.
Agreed.
It's a great time to sell. And also, buyers are picky. Buyers have been very, very selective. The buyers, the younger buyers, when I say younger, the 30 to 40
Millennials.
Yes, thank you. They don't want to do any work. They have no interest in hiring a painter, contractor, electrician, plumber, roofer. So, for those people thinking about selling, if you need some repair work done,
Do it.
you'll pay less for it up front than you will on the back end, because in a buyer's eyes, when they see a property, they think it's going to cost them twice or three times as much to fix something than it really does. So take the time, do the small deferred maintenance that's been growing in your house for the last 20 or 30 years, and then you'll be able to get your price that you wanted. Absolutely.
Well, the
That's what we're saying.
majority of the buyers are able to maximize their mortgages. They don't have a lot of the cash and they want the 20% down or even more. So they want to be able to move right in. And if there's glaring issues that potentially might be misinterpreted as bigger than they really are, that's going to hurt the seller. Lorenzo, what have you seen in the market?
With that being, with the rates going up, but it still seems pretty strong. We had a lot of action this weekend, and as a new agent, I'm still learning. So, but so far so good. So.
Yep. So the rule of thumb is 1 point of interest rates that increases your expense by about 10% or reduces your affordability. So what that means is if you have a property that was going to cost you $4,000 a month, it's actually going to cost about $400 a month more if the rates are going up. And in some cases, actually even more than that. So, and that is to Barbara's earlier point that some buyers are going to start looking at a lower level of affordability because of that, because their affordability is going to go down. So what's our prediction for the next couple of years? Barbara, then Arthur.
So I wanted to address the question earlier, which will project what the prediction for the market is. This is not what it was in 2008. This is not a market that is based on subprime mortgages and toxic mortgages and financing people that didn't have the money. We're seeing people with more money, cash, down payments than we ever have before. So it's certainly not going to crash the way some people expect it to. And because of the low supply for so long and the great number of buyers out there, even with the interest rates, which seem to be going up regularly, it's still not what it used to be 10 years ago when it was 6, 7, 8%. They're still good rates. So I predict it's going to stay the same until, and maybe level off a little bit, because buyers, some of them are cooling off or can't afford now, or are just taking a break. And sellers do need to get their property prepared. But I do think even if it levels off just a little, we're in for another, my guess is a couple of years of trying to get the market balanced and kind of have it correct itself so that we're back to a calm, market where buyers have choices without stress and sellers will negotiate because they want the best buyer.
Look, it is a great time to buy. It's a good time to sell. People are moving here for jobs. It's a strong job market that's going nowhere. We have 25 to 30 universities and colleges that support this.
Yeah.
That are doing very well and strong. So it is what it is. I mean, you gotta figure it out, and we'll all make it through.
Also, the fact that half of the people exited the market during COVID and they've been re-entering the market in the last 2 years, or really a year and a half. And just to show quick comparison of condos versus singles in Newton, as far as inventory is concerned and how it compares to more normal pre-COVID times. So right now there's 77 homes, single family homes on the market in Newton. Last year at the same time, there were 67, so 10 houses more now. But in 2018 and 2019, 145, 143. So we are still at half of the inventory that we normally would be. But for condos, actually, it's very interesting to look at. There are 54 condos on the market in Newton right now. Last year, exact same time, was 53. But in 2019, there were double condos on the market, 103. In 2018, 50. So the condo market, I actually think there might be more opportunity in the condo market right now. But again, this kind of report and research should be done by your agent for you, depending on where you're looking. And I think that that's going to predict your next move and your strategy when you're making an offer. Because even though the market is very strong and everything we just talked about, but there are going to be areas where maybe, or weeks where more properties come on the market. And then as a buyer, you might have a great opportunity.
Great.
Thank you so much, Coldwell Banker Newton, for joining me this morning. This is always so fun. And we'll see you in a couple weeks.
Thanks for having me.
Thanks.
Have a
Thanks,
great
Barbara.
day.
Thanks,
Call
Arthur.
your realtor if you need more information.